Hello everyone, welcome to week 6 of our series, Building a Strong, Prosperous Financial Future. Today I'm going to talk about Smith maneuver. Now, last week I told you about mortgage strategy of aggressively paying down the principal on your mortgage. When you do that, you build up what they call equity. Now you can talk to your bank about setting up home equity line of credit, HELOC. So if you build up enough equity and there's enough money for you to take a loan out of HELOC, what Smith maneuver is saying is that you should invest that money in an income generating investment. So a good example would be a rental property. Now, if that is what you settle for, make sure that rental property, that you do your due diligence, you do your math, make sure it's paying a very high net cash flow. Now you have a rental property, you have to report, at the end of the year, tax year, you have to report income on that rental property. So what Smith maneuver is saying is that the interest you pay on that HELOC loan, that interest becomes a deductible expense from the income you make from your rental property, if that is what you settle for as an income generating investment. Now, there are other examples of income generating investment, but for now, let's stay with the rental property. Now, when you choose that rental property with high net cash flow, make sure that that cash flow, you are returning it back to continue the aggressive reduction of the principal. So you're taking your net cash flow, take it and pay down again, continue to pay down the principal of your original mortgage. By that, you are building more equity. And with time, you have equity to take out another HELOC loan to buy another rental property. So when you continue that 30 years down the road, you probably will end up with 4 or 5 rental property in your portfolio. And then your retirement becomes easy. So that is Smith maneuver, and that is how you can build that future of retiring well. Now, I also mentioned last week that I'll be talking about Ajo Pro. Ajo Pro is a credible platform where you can make periodic or monthly contribution. And then at the end of the term of your contribution time, you collect that money and you can use it to do the aggressive pay down of principal on your mortgage. Ajo Pro also have what they call back-to-back. So you finish a cycle, you collect the money for that cycle, and then they place you at number 1 for the next cycle. Again, so now you collect a combined amount. Let's say you are doing $500 a month. So at the end of the 12 months, with back-to-back, instead of $6,000, you collect $12,000. Take that $12,000, go and pay down the principal on your mortgage. So that is Ajo Pro. But I want you to go and find out about them. I know it's a credible organization, and I will not be saying that because I'm a CPA. There's no way I'm going to be involved in something that is going to destroy my reputation. So that is for today. Next week, we're going to start a series on life insurance. My name remains Adekunle Ajishebutu, CPA CMA. I will see you next week. Again, if you like what I'm doing, please comment, press the like button, share with your friends. And of course, I want to hear from you. Thank you so much.